Have you ever pondered why it appears more arduous to secure a mortgage or a business loan when you operate your own business? It's not merely a figment of your imagination. There exists a series of primary factors that complicate these fiscal procedures for independent business operators. To begin with, a variable income can pose a considerable obstacle. In the absence of a consistent salary, lending institutions may perceive you as a risk. Furthermore, the apprehension surrounding employment stability can serve as a significant deterrent. Banks and other financial institutions often show a preference for applicants demonstrating long-term employment within the same organization. Lastly, and perhaps most vexingly, is the challenge of attesting income. For the self-employed, evidencing a consistent and adequate income proves intricate, particularly if you're managing multiple sources of income or if your business operates on a seasonal basis. However, these barriers should not be seen as insurmountable. Tailored solutions exist specifically for self-employed individuals. This will provide an in-depth analysis of these challenges and explore how you can surmount them to secure your financial future. One of the biggest hurdles for self-employed individuals is securing a mortgage, but what exactly is a self-employed mortgage? A self-employed mortgage is a home loan designed for individuals who work for themselves. These individuals may be freelancers, business owners, or independent contractors. Unlike traditional mortgages, which are based on a person's salary, self-employed mortgages are based on the income you declare on your tax returns. You see, when you're self-employed, your income might fluctuate from month to month. This can make it difficult for lenders to gauge your ability to make regular mortgage payments. That's where self-employed mortgages come in. They take into account the unique financial circumstances of self-employed individuals, offering more flexible lending criteria than traditional mortgages. Now, how do self-employed mortgages differ from regular ones? Well, the main difference lies in the way your income is assessed. For regular mortgages, lenders typically look at your gross income before taxes. But for self-employed mortgages, lenders often consider your net income after expenses. This can be a double-edged sword. On one hand, it can help you qualify for a larger loan. But on the other hand, if your expenses are high and your net income is low, it might limit the amount you can borrow. So, what are the eligibility criteria for self-employed mortgages? First, you'll need to provide proof of self-employment. This could be your business license, tax returns, or bank statements. Second, you'll need to show that your income is stable. Lenders typically want to see at least 2 years of consistent income. And finally, you'll need a good credit score. Just like with any other loan, the higher your credit score, the better your chances of approval. Remember, every lender has different criteria. So, it's important to shop around and find a lender that understands your unique financial situation. Don't be disheartened if you're turned down by one lender. There are plenty of others out there who are willing to work with self-employed individuals. So, while there might be a few more hoops to jump through, getting a mortgage when you're self-employed is certainly achievable. Scene script. Similar to mortgages, business loans can also be a bit tricky for those flying solo. But again, there are options out there. Navigating the business loan landscape as a self-employed individual can be a bit like charting unknown territory. But don't worry, we're here to guide you through the process. First off, there are several types of business loans available to self-employed individuals. Traditional bank loans are the most common, but there are also online lenders, microloans, business credit cards, and even crowdfunding options. Each of these has its own set of requirements and benefits, so you'll want to do some research to find out which one best suits your needs. For a traditional bank loan, you'll typically need to show proof of income, a solid credit history, and a well-drafted business plan. Online lenders may have more flexible requirements, but the interest rates tend to be higher. Microloans and business credit cards can be a good option for smaller needs or short-term cash flow issues, while crowdfunding can be a great way to raise capital if you have a unique business idea that captures people's imagination. Improving your chances of approval involves showing lenders that you're a safe bet. This means having a solid business plan that clearly outlines your business model, your target market, and your strategies for growth. It also means keeping your credit score in good shape and having a steady income stream. If possible, try to build some savings as well, as lenders often look favorably on borrowers who have some skin in the game. Another tip is to build relationships with lenders before you need a loan. This could involve opening a business checking account or credit card with the lender, or simply meeting with a loan officer to discuss your business. This can help you understand the lender's requirements and show them that you're serious about your business. Remember, securing a business loan as a self-employed individual is not impossible, it just requires some extra effort and careful planning. So don't be discouraged if you face some hurdles along the way. Remember, the key to securing a business loan as a self-employed individual is to show lenders that you're a safe bet. So, we've uncovered the challenges and explored the solutions. Now, what's next? In this journey, we've demystified the world of self-employed mortgages and business loans, breaking down the hurdles and how to overcome them. Let's take a moment to revisit the key takeaways. First, we learned that self-employed mortgages are not as elusive as they seem. By demonstrating a stable income, maintaining a good credit score, and showing a low debt-to-income ratio, you can make yourself a desirable candidate for lenders. It's about showing lenders that even though your employment may look different, you are a reliable borrower. Next, we dove into business loans for the self-employed. Here we found that preparation is key. Having a solid business plan, understanding your financial metrics, and exploring different loan options can open doors. Just remember, each lender might have unique requirements, so it's crucial to do your research. But what do you do with all this knowledge? Here are some actionable next steps. Firstly, assess your current financial health. This involves checking your credit score, calculating your debt-to-income ratio, and getting a clear picture of your income. Secondly, start planning. If you're aiming for a mortgage, consider how you can demonstrate income stability. If a business loan is your goal, work on your business plan and understand your financial metrics. Finally, research your options. Look into different lenders, loan types, and requirements. Don't limit yourself to traditional banks. Consider credit unions, online lenders, and other financial institutions too. Remember, this process may take time, but with persistence and preparation, you can navigate the financial landscape and secure the funding you need. Don't be discouraged by initial setbacks. Instead, learn from them, adapt, and keep moving forward. While the path may seem daunting, remember that being self-employed doesn't mean you're alone in this. With the right approach and preparation, securing a mortgage or business loan is well within your reach. Before we wrap up, don't forget to subscribe to our channel for more insightful tips and tricks on mastering self-employed mortgages and business loans. Staying updated with the latest information can make all the difference in your financial journey. All you need to do is click on the subscribe button below this video. And remember, we're here to help guide you through this process and provide you with the knowledge you need. Thank you for watching, and remember, knowledge is power when it comes to securing your financial future. Let's navigate this journey together, one step at a time.